Hi, Timothy.
Hi, Clément.
The Italian Republic issued a new green bond at the beginning of the year. Why is this a positive signal for sustainable finance?
On January 7th, the Italian Republic issued its fifth green bond with a maturity of 20 years and an amount of 5 billion euros. This brings the total outstanding amount of the Italian government's green bonds to over 45 billion euros. By comparison, France has 4 green bonds in circulation totaling over 90 billion euros, while Spain has only one for 17 billion euros. This new issuance was significantly oversubscribed with a record order book reflecting strong investor demand for the theme. This financing will support Italy's environmental ambitions, particularly in the areas of clean transportation, energy efficiency, and renewable energy. This 1 billion euro bond with a 20-year maturity aims to roll out entirely clean buses by 2029, modernize trains, and expand the fleet of electric bikes for Île-de-France mobility. In a nutshell, this will lead to less noise, cleaner air, and more pleasant working conditions. Importantly, this bond is among the very first to comply with the new European standard for green bonds, which has established a new norm to harmonize the green bond market since December 2024. This legislation aims to narrow the scope of the CSRD, which mandates sustainability reporting. Going forward, 80% of companies will be exempt from producing a sustainability report. This applies to businesses with more than 1,000 employees or over 50 million in revenue. It is indeed crucial to balance support for SMEs with the need to uphold transparency and accountability in sustainability matters. Germany has recently softened its opposition to nuclear energy by accepting its inclusion in the European taxonomy for green investments, which could lead to increased cooperation with France, particularly by considering participation in France's nuclear shield. However, this does not indicate a return to nuclear energy within Germany, which closed its last reactors in April 2023, marking the end of the nuclear era in the country after 60 years of using nuclear power in its energy mix. This gradual phase-out was initiated by former German Chancellor Gerhard Schröder in 2002 and accelerated by Angela Merkel following the Fukushima disaster in Japan in 2011. The chocolate sector is under heightened pressure due to rising prices and extreme weather conditions, such as droughts in West Africa, which impact production. Issues related to deforestation, child labor, and farmers' poverty are also concerning. To address these challenges, companies are adopting sustainable practices and seeking to diversify their sourcing to meet growing demand while protecting the environment.